Okay, I'm about to go live. Before the call starts, let me just show you guys a little bit about what I'm looking at. Nasdaq ended up hitting take profit from that trade that we're looking at. All right, so we were playing inside of this range. You guys can see we formed support here on the bottom, resistance on the top. We came up, broke through that zone, retested a few times, and then ended up continuing. Price actually hit my target, 16,400 yesterday, came all the way back, and I managed to catch a scalp at 16,300. Now we're back up at these highs, and so we want to see if we're going to make it back inside the range, come back down one more time before we push off. If the market continues to form higher highs here, then we're just going to keep making it to all-time highs. Nasdaq is very, very close to all-time highs. We are like about 70 points away from all-time highs. Let me check this out. Make sure that there's folks on the stream. US 30, I'm still bearish on. GJ, I'm actually very bearish on. If you guys are looking at GJ, I'm expecting this thing to come all the way back to 152 or maybe even like 151.5. Oh, damn. Damn. We were looking at this over the weekend, the GBP USD short. I wanted to call this on the call with you guys. It looks like it's already leaving the station. Damn. This has been a common theme over these live streams. We get on here and the moves have already gone. Might have to start moving these to like 7 a.m. Yeah, I'm pretty upset about this. It's getting really annoying to get on these streams and then be like, oh, the move's already gone. Let's just watch it leave. Like that's really annoying. Oh, goddamn. Maybe a sell limit at 1.35 for a re-entry. If price comes up to give us a double top, we'll be able to get re-entered. But at this point, the sell limit at the 61% would have been the best trade. Put that off to the side for now. I don't care about the rest of these. Okay, so NAS and GU. All right, let's see if folks are getting on. If folks aren't getting on, probably just gonna, what's it called? Just gonna make this a short call. If nobody on YouTube hops on, we'll probably just end up turning off the YouTube link and then just trade together as a small group. Sorry guys, I'm just trying to let folks know that the stream is starting. Damn. Oh man. So we got about 50 people on YouTube, about 30 people on the Zoom. 30 people on the Zoom. People are in the messages all day like, why aren't we live streaming today? Why aren't we live streaming today? Where are you? Where are you? Where are you? And we finally live stream and nobody shows up. It's real cool. All right, let's go through updates. Let's go ahead and get the show on the road. What's up, everybody? Happy Thursday, early Thursday morning here, coming out of Virginia. Gonna go through some charts. I want to give you guys some updates first. First big update, Forex Summit 2022. The FX Summit 2022 is underway. Guys, I highly recommend getting your tickets before they sell out. The conference is 3 days. It's guest speakers. It's guest speakers, institutional folks. What's going on here? All right, website's having a little issue, but you guys can see all of the guest speakers. You guys should head over to that special guest tab and try to check out all the guest speakers that are showing up. It's basically everybody who's relevant in the social Forex industry is going to be at this event. So it's an opportunity for you guys to come meet them, come say hi to Q Banks, come meet Anthony's World, come meet Uncle Ted, come meet, Wix Don't Lie, come meet Mamba FX and like all these guys, and just at least come and connect with the community in person. If you have no interest in meeting any of these people, at least come and connect with the other thousands of traders, potentially thousands, most likely hundreds of traders that are going to be coming from around the world that are doing the same thing that you're doing. And so this convention is like the first chance for you guys to come out, see people in person, and really connect with the trading industry in a way that's like strictly social. And it's going to be educational too. But if you guys haven't gotten your tickets, make sure to go out and get your tickets early before they sell out, okay? That's the FX Summit 2022. You will not want to miss this. And it's being hosted and organized by us. So any questions that you guys have about the event, you guys can just bring them to us, okay? I don't want to announce this too soon because it's sort of like in the wraps, but we'll keep this between us. Top Tier Trader is also co-sponsoring the event. More details are going to come out about that today, and it's going to be pretty exciting. So let's get right into the charts. Pretty upset about this. We're about 30 minutes late to this move. This was a beautiful, beautiful entry. I was looking at this throughout the weekend. GBP USD has been on a bearish trend on the smaller time frames, smaller being the 4-hour. It's bearish impulse, retracement, bearish impulse, retracement, bearish impulse, retracement, bearish impulse, and now we're on a retracement. So we look at where this retracement level is. We look left, previous area of interest, which is kind of sitting around this zone, around the 71% zone. Price ended up making an impulsive bearish push in the direction of the trend, and then coming up to retrace 61%, perfect 61 rejection. So right now, price is about 40 pips away from that entry. That 61 retracement level would have been the perfect entry, but we were about 30 minutes late getting on the call. So that's the trade that I'm seeing. There's two options that I can see now. 40 pips, guys. 40 pips is a trade, and so you don't have to hold it for it to hit the full 200 pips. If you did catch the 40 pips off of this 61% rejection, for a lot of you guys, your weekly goal is 50 to 100 pips. You'd be done for the week right then and there. And so you have to you have to think about it in terms of your account and just say, if I start catching these high probability moves using these Fibonacci retracements, even if it doesn't keep going, can that 40 pips, is that a good enough move for me? The answer is usually yes. And so those kinds of trades usually happen at high reaction zones. So let's say a daily support, daily resistance, and these key Fibonacci retracement levels, you're going to get these short-term reactions there. Now, is it going to be the reversal of the market? Not sure, but you'll be able to get those moves. So here's what I'm looking at for GU. A double top at the 61 would be ideal so that we can get this short position to the downside. Option number 2 would be a retracement up. So this would kind of be to fake all the sellers. Then we would get a retracement up to the next Fibonacci level, this key zone, and then we can sell from here. So that key price level is 1353, 1353. All right. So that's what I'm looking at. I'm looking to see if we can get a pullback during the market open. a pull back to the upside so we can get a really nice short position, either a double top at 1.35 or a little bit higher at 1.353. So got a quote for the day. Let's not look back in anger, not forward in fear, but around us in awareness. That's good. Let's be present. I mean, that's the thing about trading is you actually cannot allow yourself to get out of the present moment state. You have to think about trading as like a performance sport. In the UFC fight, if the fighter takes their eye off the ball, if they kind of lose focus for a millisecond, you're getting knocked out. You're going to wake up in a stretcher. And so performance sports where it's just you versus, like it's a solo game, you actually don't have a choice but to be in that peak performance state. And the peak performance state is not really looking at the future or not looking at the past. You really have to be as observant as possible about the present moment. Now, there's another caveat to that, which is you don't have to like it, right? No one's asking you to like the present moment. No one's asking you to like what you're seeing, but you have to be aware of it. So real quick, before we actually start trading, we might as well do a quick exercise together. If you guys are watching this at home, do a quick exercise. Look around the room and just start getting a little bit more aware. So first thing I want you guys to do, if you guys are listening to this at home, is first start feeling your back on the chair that you're sitting in. Start feeling your back on that chair. Now, move that focus to your feet. Feel your feet on the ground. Okay? So now you have your back and your feet. You can basically feel the physical space around you. Now start to get an awareness of things like, 10 inches, 20 inches, 30 inches around you. Start with the things closest to you. Build some awareness about your surroundings and try to build some awareness about yourself and your surroundings. It's a quick trick that I use to kind of get myself in a performance state. And I used to do this before I fought as well. So you'd have to basically just get as present as possible. If you're thinking about the outcome of the event, then you're not actually focusing on the things that are going to make you money. If I'm focused on the fact that, oh my God, GU is going to be down here, GU is going to end up down here, I'm never going to actually focus on where are my entries. I'm always just going to be feeling FOMO or feeling like I need to jump in the trade. The more aware you are, the more you realize, okay, the entry is going to be up here. I got to stop thinking about the fact that GU could just bleed. That's in the future. You see what I'm saying? So if you look at your surroundings, you feel your back on the chair, you feel your legs on the chair, you looked around at your parameters about 10 inches, 20 inches, 30 inches, 40 inches, 50 inches. The next thing to do is to turn it inwards for about 30 seconds and to start noticing your breathing. Start becoming more aware of your physiology right now. Okay, how are you sitting? Are you very kind of tensed up, kind of leaning into your computer? Are you more leaned back? Are you more sort of in a relaxed state? Are you too relaxed? So start becoming more aware about your physiology. How's your heart rate? How's your breathing? Right? Shallow breathing usually means stressed. Deeper breathing usually means a little bit more relaxed. Once you become aware of all those things, you're finally in the present moment. And then you can just sit there and have a more rational perspective on the markets. 90% of trading errors actually come from not being in the peak state. Okay? If you're thinking about the past, all the trades that you've lost, like this trade looks like the trade I lost earlier this week. So I'm getting worried about calling the trade or I'm getting worried about taking the trade. That focus on the past or the future is what throws most traders off. FOMO is caused by fear of missing something in the future that hasn't happened. Anxiety and fear and all this other stuff comes from burdens in the past. So you've been burned by the market and you don't want to let that happen again. So it's really important for you guys to get as present as possible before we start trading. Because I could tell you all the technicals that you guys want. I can give you all the answers, which I do every single day by giving out the exact levels that the market's going to abide by, getting on the calls and explaining exactly where we're looking to take the markets. But if you're not in the right mind state, you cannot capitalize on that. If you're not in the right mind state, I can tell you guys the trades to take today. 60% of you will lose money, 20% of you will make money and give it back, and 20% of you will walk away with money. But if we can get everybody in that peak performance state, we can increase that winning percentage by 40 or 50%. All right, so that's my advice to you guys is every single person here is literally just waiting for me to give you the next trade. In order for you guys to actually win in these trades and to be flexible enough to get in and out, you need to be as present as possible. The 60-day challenge, that's basically what we're doing. You can live in a suspended state of presence if you practice it. So the 60-day challenge, we're focused on that. The next 10 days, we're focused on diet. So these next 5 days, we're focused on eliminating one unhealthy dietary habit. The 5 days after, we're going to be focused on adding one nutritious dietary habit. And that's just going to help vitality. It's going to help energy. It's going to help longevity. It's going to help endurance during the day. It's going to help focus and cognitive function. So take your role as a trader seriously. Understand those things like presence, like cognitive function and health, and how they play into your performance. And do not think that you're going to show up to the most competitive markets in the world, where Goldman Sachs and JP Morgan are paying PhDs multiple six figures a year to beat these markets. Don't think that you're going to walk in here in your pajamas and just crush it every day without being ready. Okay, that is my advice to everybody. Say, oh, Roy's not telling me that everybody can be a trader. I hate this call. This call sucks. I'm here to tell you the truth. I told you guys, not a popularity contest. I want you guys to win. So the only two pairs that I'm focused on are GBP USD, where we're waiting for that pullback and sell, and NAS 100. NAS 100 is back at all-time highs. The market is breaking above. The market is breaking above. Here's what I see for the market open. I'm going to give you guys a prediction, okay? We don't try to predict the markets, but I'm going to give you guys my most likely scenario just because, you know, I'm trying to flex a little bit. Push up right here, okay? Right before the market opens. Giant push up makes everybody thinks the market's going to go bullish. Market open, wick right back down to make it look like a bearish pin bar. And then at the market open, we're going to buy it at the close of that bearish pin bar and take the market to the moon. Is everybody clear about that? Okay. Now, if the market pushes up, if the market does its first push up and then it crashes back down and closes below these highs, if it closes below these highs, so a giant pin bar comes up, comes back and closes below, then it's most likely going to retest here and short down. But if this candlestick that wicks up comes back and forms this like inverted hammer, then what that shows is inverted hammers in the direction of the trend. So the trend is bullish. You get an inverted hammer right here. Most likely they're going to get filled. Most likely the candlestick will get filled on the upside. So that's what I'm looking for, is to see that spike up before the market opens, a spike back down, and then we're going to see how that closure of that candle is. It's going to be either above or below the zone. Right now, if we can just look at it strictly from an observational point, here's the previous high, and we're creating a new low right here. Okay, what this does before the market opens, especially for indices, it's enticing traders to start guessing a direction. We're at all-time highs, so sellers are starting to load up, but we're also in very aggressive bullish momentum. So bulls are starting to load up. So right now is basically a gambling game. So what I've seen the market do, and this is because I used to live trade almost every day. We used to get burned so often. You guys remember, if anybody was here, if anybody's an early bird ChartAddicts member, you guys remember the days I used to live trade gold and SPX? The first couple months, it was horrible. The entries were perfect every time, but we were either too early, we were either holding it and it would hit our stop loss. Like let's imagine that we tried to take a short position here. What would happen is that we'd get like probably 20 points in profit, and then the market would smash up. And so then we would start to switch our bias to the bullish side just to have it come back and crash. And so through experience, I started to realize that at the market opens, there's liquidity grabs that are meant to shake out people out of their positions. So what happens is it'll fake to the upside to entice all the buyers who are waiting here since yesterday and the day before, who have been buying the market. So they're all waiting right here. The market will entice them to push up. So then they'll all just start jumping in with late entries. And then all of a sudden at the market open, it wicks back down and it convinces those people to either close their trade or it hits their stop loss or stop profit. It might go down a little bit below the zone to convince sellers it's going to drop, and then retest, new highs, and then all-time high. So there's going to be some sort of fake out during the market open. We are going to catch the direction of the fake out, and we're going to catch this trade. Do you guys have any questions on YouTube or on Zoom about this Nasdaq trade? I don't want to sit here and like have to re-explain the technical idea later. I just want to be able to give you guys the entries so we can make some money today. So let me know, at least in the chat, if you guys understand the technical component of this Nasdaq setup. If we're looking for that fake out at the market right before the market opens, we are looking for that crash back down at the 9:30 market open. And then after the 9:30 market open, about 9:45 or 9:50, we're going to have a direction of the day. We'll be able to jump in and we'll be able to catch the continuation of the move. Reza says, hi, I'm new. Good to be here with all of you. Reza, welcome to the team. Great to have you too. Good morning. Do we have important news today? The answer is most likely yes. I'm not going to sit here and guess, but we've had FOMC news all week, and I think that there's two. I put FX Summit. This is how you guys know I've been focused so much on the FX Summit. I'm supposed to go to Forex Factory. There's been FOMC news all week where different speakers from the different Federal Reserve banks across the country are just having these virtual conferences. Now, the Federal Reserve is a non-government entity that is one of the most powerful organizations in the world, and they really, really don't like doing press. And so I'll be honest with you, I'm not really sure why they're doing so much press right now. Maybe they're trying to calm the markets down. But all they're really doing is just kind of worrying people in terms of the state of the economy. So 8:30, and Carla, I really appreciate you bringing this up. We actually have unemployment claims and the manufacturing index. Here's my my guess about how this is going to go based on the fundamentals. The manufacturing index is like a confidence meter of all the different manufacturers in the country to see how confident they are in their ability to continue manufacturing. So if their supply chains are good, if they can get in the raw materials, then their confidence is high. If they have enough people working at their factories to make this stuff, their confidence is high. If there's enough people to transport these goods and to get them where they need to go, their confidence is high. And so a high manufacturing index shows that the manufacturers in America are confident about making goods, which means that we're confident about buying goods, and then it's good for the economy. This manufacturing news is really good for US 30. So if this comes out positive, US 30 is going to have a giant recovery to the upside. If this news comes out negative, US 30 is going to continue to crash. So any US 30 traders in here, just be mindful of the manufacturing index. What the rest of us need to be watching is the unemployment claims. The unemployment claims is one of the biggest focuses for the market today. It's how many people are filing for unemployment in this country. I think right now the total number is about 4 million unemployed individuals in the country. So that's something that we're gonna have to watch for the indices. If we have less people filing for unemployment, that is good for the economy. That is good for the economy. And so the indices, the stock indices are all going to recover if the unemployment claims comes out less than expected. They are expecting 260,000 new claims. So 260,000 new people have applied for unemployment benefits. If the number comes out less, that's really good. If the number comes out higher, that's not so good. I also see the FOMC member Williams is speaking about ECB bank strategies. They also talked about this yesterday. Virtual symposium at the BKD Financial Services, monetary policy. Federal Reserve member Evans, key interest. Okay. These things, the thing about people speaking is, like, this is how we look at news. This is how analysts look at news. It depends on who's speaking. It depends on how much power they have. When Jerome Powell gets out in front of a stage, that guy single-handedly has enough power to change the value of a currency around the world. But the FOMC members, they're just one member out of a committee that all has to agree on a common decision. So just because they come out here and speak doesn't mean that if they're like, well, I don't agree with Chair Powell about inflation. The market is not happy about that, but they don't actually have any power to do anything about it. And so these FOMC speakers, to me, are not as volatile because these guys don't have enough power to actually make stuff happen by themselves. They need the rest of the FOMC to agree with what they're doing. So these speeches are more so people let things slip when they get stuck during an interview. Okay, so you ask someone questions on an interview and they get a little bit stuck. They're going to start to tell you the truth. They're going to start to tell you more than you need to know. And that's something that the FOMC speakers struggle with. They sometimes get up there and they say stuff they're not really supposed to say to the public that panics the public markets. So that's why these cause a little bit of trouble in the markets, but there's no clear direction that's going to be caused by anything that they say. So I hope that makes sense. The unemployment claims is a real data. It's real data, and it's a real number that we can use to dictate, or sorry, to kind of like predict the future of the economy. These they just make the markets uncomfortable, and they're just a lot of volatility. So earlier in the day, I think we're going to get some clear movement, and later in the day, I think we're going to get a little bit more choppy. Okay. We are seeing generally a more risk on tone as the dollar pullbacks are reaching the 96 handle, which is a major resistance. The dollar pullback, I think it's honestly a trap. I think that the dollar pushing bullish is a trap because in the next probably 6 months, the money that's been appropriated for the stimulus, the $1.2 trillion infrastructure bill, it's not stimulus, it's $1.2 trillion infrastructure. Once those first contracts start going out and that money starts being circulated in the economy, that money is going to affect the dollar for sure. And so this infrastructure bill, $1.2 trillion of new money being added to the economy is going to hurt the value of the dollar. I don't think it's played into the economy yet, or I don't think it's played into the value of the dollar yet, because the money hasn't hit the markets yet. It's still sitting in the government's bank account. But as soon as that starts going out to contractors, laborers, taxes, everything, that money starts circulating in the economy, the value of the dollar will drop again and indices will go back up. Now, the biggest trade of the last 10 years could be next year. Okay, I've been talking about it with the ChartAddicts members for some time now. It's the interest rate play. If you guys know what I'm talking about, put it at what is the biggest trade of the year next year in terms of interest rates. Y'all can let me know in the chat. He said, make it online also. Sorry, guys, the convention has to be in person because we need you guys to show up. We need you guys to show up in person for this event. Lino says, bearish indices will smash with a wall. That wasn't my question. I said, wait, what is the interest rate trade? What are we looking for in terms of like the trigger? Because by the time that the markets start moving, it's too late for us. And so if you guys want to get early on some of these big moves that you see people get in on, you always have to look at the trigger. What is the thing that you're looking for in the news or in the in the numbers to be able to tell, okay, the markets are about to crash? My good friend Gali is in the chat. What's up, Gali? When they raise interest rates, a lot of money will leave the markets and go to other assets. Thank you, Gali. One person, guys, one person knows that we're headed into a brick wall. Guys, this, ladies and gents, this is the global economy we're talking about here. You do not change tax brackets by working a job. You will never change tax brackets by working more hours at your job. You want to know how to change tax brackets? Is finding these quality trades that are going to be able to milk your account. And if it's not trades, then at least investments. You know, maybe you're invested in some things you might want to get out of when the interest rate play happens and then get back in at the dip. You guys got to know. You guys got to know the future of the economy so you can be prepared, so you can set yourself up for success. There's two kinds of people. In 2008, there's two kinds of people. There's some people that lost their entire investment portfolios, completely went bust, and they're to this day still recovering from that crash. And there's people that became richer than they've ever been during that 2008 crash. Okay, what is the difference? Some people were prepared. Some people looked at the warning signs. When the warning signs presented themselves, they moved over to the sidelines in cash. And then when the markets crashed, they moved back in at a lower price. Okay, so I want you guys to be, this is not financial advice, but look at the state of the economy in the future and be prepared. Nobody should be sitting here in 5, 6, 7, 8 years and their kids or somebody asks them what they were doing during these crashes. And you say, I don't know. You say, I'm not really sure what I was doing. All right, that's not really an excuse. You guys got to be ready. So there's two games. Like, I'm not really trying to play games, actually. I'm not trying to play games, but like a quick thing that we could do is buy the first spike up. As soon as we get a little bit in profit, we can put our stop loss and break even. We can catch the first pump up, close the trade. It comes back down, we can re-enter the trade. But I think the smartest thing to do is to show you guys how I actually look at the markets, which is in terms of patience. And so what I think I'll do is I'll wait for that spike up and spike back down just to get that higher probability trade. But just know that like when you get very comfortable with your strategy, you can start taking advantage of it no matter where it is. So if it's right here and I want to catch the spike up before it spikes back down, you know, those are some positions that you'd be able to navigate in and out of. All right. That's what I mean, the wall. No, I got what you meant. I just needed to know the trigger, not just that indices are going to crash because of interest rates, but what are we looking for? Because by the time that it's mainstream news that the interest rates are going to rise, the markets are already going to be crashing. So we're going to have to use a combination of like, okay, we have the technical analysis that we're constantly looking at structure. And then we have to look at we have to keep our ear to the ground to figure out when they're going to start talking about raising interest rates. I think that they mentioned the second quarter of next year as that date for the interest rates. So I think around May or June, that's when we're going to see a little bit of a slowdown in the markets.
Yo, Roy.
What's up?
So what do you think is going to happen with everyone's like 401ks and pension plans and everything once that happens? Retirement.
They'll get backed by the federal government. The federal government's never going to let the retirees or the pension funds fail. And so just like we bailed out the big banks in 2008 to avoid a global catastrophe, we'll bail out our retirees to avoid a retirement crisis. Because the retirement crisis will make 2008 look like a freaking joke. It'll make 2008 look like a walk in the park if they actually allow the retirement bubble to burst.
But we did that in 2008 by dropping interest rates.
The interest rate play is like they don't have a choice. They've already printed too much money. They've already introduced too much new funds, and their balance sheet is already too big. They've already bought too much assets on the open market. The only tool they have left to like work with the economy and to kind of play with the dollar is interest rates. So they're not raising interest rates because they think it's the best thing to do. It's their only option.
Yeah.
If they get rid of that, we have no more safeguards behind that. And so if they're going to raise the interest rates, it is going to mess up a lot of people's pension. Like, first off, when the markets crash, like let's say they crash next year, if you were supposed to retire next year, your financial advisor would tell you that you can't retire. Because if you're going to start pulling money out of your retirement while the markets crashed, then you're just gutting your account for no reason. So those are some things that we'll have to watch out. Like if there is a market crash, retirees won't be able to retire because you'll just be eating into your retirement funds. So here's a quick example. Someone has 300K in a retirement fund. If the market crashes, now he's sitting at 220. If you start pulling money out of the 220, when the market rebounds back up, you're not going to have that 300K. Okay, you're going to have hurt your chances of making money in the long term. So those are some big problems with market crashes. But the one thing that we know about the federal government and about the central bank is that when it comes to these very important, like student loans, the banking crisis in 2008 and the retirement crisis, which are the three biggest kind of like bubbles that are forming in the United States, the mortgage bubble already burst. We have a student loan bubble, and we also have a retirement crisis bubble. They will not allow those to crash. They can't. Everybody in America is invested in the markets in some way, shape, or form. If you have a corporate job, or if you have a job that offers retirement services, then you have a 401k. If you're working for a small business, maybe you have a 401b, or maybe you have like a 403b, or maybe you have an IRA. However you're invested for the long term, chances are that you're invested in these markets. Now, here's the most dangerous thing, is that bonds aren't paying. Bonds aren't paying. So a lot of these advisors and a lot of these firms are starting to go heavier into stocks and putting their clients' money into stocks. Now, if you guys don't know about investments, stocks are significantly more risky than bonds in terms of how much they move, volatility. So the more that someone's like, getting closer to retirement, you don't want to put them in the stock market or over expose them in the stock market, because this thing is moving up and down. You want to put them in bonds, things that don't change that much. But because there's been a culture of bonds not paying out, everyone's moving their money to things that will actually produce yield, produce a return, which is the stock market. So I think the stock market is inflated. I think it's very dangerous what they're doing with pension funds and retirement funds, overextending themselves in the stock market. I think that there is a retirement bubble, and I think if it bursts, it's going to make 2008 look like a walk in the park. but I also know that the government will print as much money as we need to in order to fix the problem. No politician wants to be the one who allowed the oldest working members of our population and our retirees to go broke. No one's going to put that on their shoulders. They'll print the money, they'll reduce the interest rates, they'll do whatever they need to do. So that's my quick take on how the government handles these problems. When all will fail, crypto will be here. All right, more or less. The currencies are not going to fail. The central governments by 2024 are going to have created, every central government in the world is going to have created their own digital currency. And what you guys will see by then is that we'll be completely off of physical currencies. So cash is going to be like a relic. Most places will say we're not accepting cash. Most places will say digital only. Credit cards are going to be obsolete probably in the next 5 years, because credit cards are an invention of the 50s and 60s, right? This idea of having a magnetic strip on the back of a plastic card, and the magnetic strip has like a reed that you can put it on the magnetic reader. That is a very old technology. And so we're going to move over to we're going to move over to like a digitally backed currency by the US dollar. And so if I send you money, it's going to be all on the computer. Everything's going to be on the computer. And they're going to be able to track every transaction and all the money that's moving around, which is really what they want. So we're headed into a world with no privacy. And yeah, someone said gold went to hell. Well, people, I've been talking about this gold trade for a while. I know that there's a lot of conflicting information that you guys have heard from different educators, but this is my take. This is my one and only take on gold. I am on the higher time frames. We had a third touch on the trend line, first touch, second touch, third touch. We're at the 78% retracement level. And so every time it's gotten up to that same price zone of 65, I've just been shorting. We look at the 4 hour. We look at all these rejections. So first we had a quadruple top rejection, fake out, and now we're forming a right shoulder. Most likely we'll continue to play in this range, right? So if you guys are trading that range, I would short at 65 and I would take my profits at 50, 150 pips both ways in that range. If the market breaks below this box, it's most likely going to retest and continue bearish. And same with the upside. If price pushes through this resistance, it's going to retest and continue bullish. But for now, I still see bearish because of the higher time frame. And I think that we can continue to the downside because third touch on the trend line, 78 retest, key psych level. All right. If we break above this resistance and we start to form support, then guys, it's going to smash bullish. This thing's going to smash bullish. The market is basically deciding whenever it consolidates at a specific resistance. The market has two choices. If the market gets up to a high reaction zone and there's enough traders at that zone, what's going to happen is the market will do a fast reaction. Okay, it'll just do a quick reaction because it shows there's a lot of interest at that level. When the market consolidates at a specific resistance, there's some indecision here. Okay, indecision could mean this is either an accumulation. Accumulation means is loading up for the next push, or it could be a distribution where a lot of people are basically getting out of their orders, and then eventually someone's going to come in and short. So when it consolidates at a resistance, you have to just look and figure out if it's an accumulation before it keeps going. Is the market just picking up gas before it continues the trip? Or is the market slowing down because it's running out of gas and it's likely to turn back around? So that's what I see. As long as we're sitting below that 65 resistance level, I think that we can move to the downside. But look at gold also on the daily. We had this giant consolidation range, and then price broke out bullish in this consolidation range. So there's obviously buying interest in this market. The whole question is, are we just going to continue in a straight line, or do we get some sort of pullback first before we continue the trend? That's what I'm seeing. Short at 65, take profits at 1 or at 1850. Does that answer everybody's question? He said gold is extremely structured right now. I'm doing the same. It's guys, it makes so much sense. Like if you just like don't complicate the markets and trade what you see and not what you want, you can catch these moves. Right? So we're sitting back at the highs of this box, and every time it gets to the high of this box, it shorts. And so you're more likely to win by shorting than by going long right here at this current price. Like those are the kinds of decisions that you got to make. Just look at the market honestly and say, where are my good entry zones? What I don't understand is how the dollar or how the DXY went up with gold before. Aren't they negatively correlated? So they used to be negatively correlated, but gold and the dollar are not correlated as much as they used to be. Now they're both being used for the same thing. They're both being used as a safe haven. And so when the markets get uncertain, what people do is they sell stocks, they sell crypto, they sell all this stuff, and they end up putting their money either in the dollar or in gold. So when they're both rising together, it tells a story. The story is that the markets are uncertain. There's a lot of uncertainty in the markets, and they're just moving money over to the sideline being dollar and gold. Okay. So for Nasdaq, as we were like talking about earlier, I said we could play around and take that like aggressive entry, this sort of push, and that as soon as we were in profit, we can put our stop loss and break even. We did not take that trade, but I'm just letting you guys know as an update, this is where we would have put our stop loss to break even to protect the trade, and we would have let this thing push up right before the market open. All right. There will be a retracement at the market open. Markets don't move in a straight line, so this thing is not just going to end up here and never come back. If it does, then it was a new spike. I don't think that we would have been able to get that move regardless. And so those are not the moves that I really look for. I'm looking for a push up and then a retracement at the market open so that we can get a nice buy position. Is gold affected by the news? Yeah, of course. If there's anything that's making the markets uncomfortable, gold could see a spike. If unemployment numbers come out positive, like not a lot of unemployment claims, and the market is doing well, people will sell gold to get into the stocks, because you don't really want to hold gold if the economy is doing well, because gold doesn't really pay that much. Nick Salazar said, I took that trade and I'm already protected. Good stuff. You're talking about the Nasdaq long, right? You're going to have a wick entry, Nick. I know this might seem basic, but how do I know if the news was favorable or not for my pairs? The only way, and guys, this is probably the only time that someone's going to be honest with you about news. You guys ready for this? This is what people usually say. People usually say, oh, I don't look at news, or they'll say, this is what's going to happen with the news. The truth is, anything can happen in the markets. The only way to really become comfortable, the only way you can really become confident in how to use news is through trial and error. And so if you are like very serious about this, what you can do is you can go to you can go and backtest every news event. So you go to Forex Factory and you go to like let's say NFP last week, or not last week, the week before. And you say, okay, NFP, it launched, it was at 8:45 p.m. What happened on the chart at 8:45? You can start to learn it that way. The other way is to basically just watch it as these news events happen. And so it's 8:30, news just dropped. Let's go ahead and go to November 18. 268, and so more people applied for unemployment than was expected. The manufacturing index came out very, very positive. US 30 should be about to pump. We're sitting right at the 61%. Right at this 36 level. And most likely price is going to break through, if I'll be honest. Most likely price is going to break through, but this is what I mean about the news. Like the manufacturing index, the confidence level of all the manufacturers in America just came out almost 10 points higher than was expected, or more than 10 points higher than was expected. This means that the economy is doing so well that nobody even expected it. And specifically for manufacturing. And most of the industrial stocks are in the US 30. So this should be positive for the US 30. Most likely what's going to happen is we're going to have a bearish push at the market open. And then for the rest of the day, we're going to get a recovery. So that's one way that I've seen US 30 play with news, is that the immediate reaction doesn't have anything to do with the result. But later in the day, the trend of the day is usually very close to the news event. Okay. And so because this is positive, later in the day, I'm expecting a bullish US 30, but right now the market's doing whatever it wants to do. We're sitting at this daily support. Let's see if we hold that support level or if we break through. I'm not looking to take a trade on US 30 as much as I'm looking to focus on Nasdaq. Nasdaq, I feel like I have a really good idea of what's happening here. We have this consolidation range down here. You're either in that range or you're not. Okay, if you're not in that range, then we're going to form a new range up here, in which case we're catching the low of that range so we can keep trading. So that's basically how I look at these markets in terms of zone to zone. We have all of our zones lined up right here, and we just basically wait for the market to give us a confirmation entry. Okay. Now, guys, that's it. I'm not going to keep, kind of beating these analysis to death. What I want to do is just take you guys' questions and just make this informational for you while we just wait for the markets to develop. We got 15 minutes until the hour closes. So let's go through, ask some good questions, and, let's see if we can get you guys some heat right here. Hi guys, what days are live? Do you guys have live sessions in the private group? So we stream live on YouTube every Thursday. For the live team, we have London session calls 3 times a week. We have post New York session calls 4 times a week. Well, 5 times if you include the Sunday Outlook. And then occasionally we stream in the mornings. I usually just wake up and I'll look at the markets. If it looks like a volatile day for intraday trading, I'll usually send out a link. But if it looks like we're going to be waiting for like a day or two for an entry, I don't really live stream because it makes people kind of anxious. They just want to jump in a trade. So that's kind of that's my take on streaming. He said, from the look of US 30, it's making higher low on the lower time frame. Yeah, it's still making a higher low for now. I think it's going to continue to the downside, but I think later in the session we can recover. Are you already in the NAS trade? No, I'm not. All right, so just a heads up for those of you guys that are just coming on YouTube, just joining in. The FX Summit 2022 is a convention hosted by us at ChartAddicts next year. It's a social Forex conference. The biggest names in the entire industry are going to be at this event. And so I want you guys to, I really want to see everybody there. You guys can see some of the special guests here. You might recognize their faces. We have Q Banks himself, Raul, Emil. There's some names that aren't on here yet. Anthony's World is going to be on here. Just haven't posted him yet. Mamba FX, we're in talks. Wicks Don't Lie. Raja Banks, he's going to be coming to the event. Jason Stewart, Ryan, Druzy Banks, Alex G, Andy Peters, James Storms. There's a lot of special guests showing up to this event. So if you guys have ever looked at these guys on social media, taken anything away from them, taken some motivation, some inspiration, some anything from these guys, you will want to come and meet them in person because it's a completely different ballgame. The schedule is also posted. You guys can see our itinerary day by day to see how your day is going to look, to see if it's worth it for you. There's some things here for your visit, such as restaurants, accommodations, and attractions. You guys can see, okay, what should I do at nighttime after the convention? What can I do? You guys can go in here and check those out. All right, so there's quick bites to eat near Miami, casual drinks, formal dinners. Let's say that you guys are looking for a quick bite in between the convention. Boom, right there on the website, takes you to those links. Tickets are right here. There's 3 ticket options. The general admission, which gets you full access to everything inside the convention. The elite pass, which includes red carpet photo services, catering during the lunch breaks, and all this other perks. And the VIP ticket that gives you access to the post-conference activities, such as the car show that we're hosting, the dinner with all the special guests, and everything else. Those are the 3 plans. That is the FX Summit 2022. There's a big announcement about sponsorships. All right, top tier trader may or may not be sponsoring the event. So it's a very, very big deal. I don't think you guys understand how big of a deal this is. Nobody has ever gotten this many people in the social space together, ever, in history. Nobody has ever gotten these people together in the same spot, especially not for a convention or a conference, something legitimate. So I just want you guys to know that we're making history here, and I want you guys to be part of history. So it's in May of 2022. Everyone has time to save up for the tickets. Everyone has time, month by month, put a little bit aside and make sure that you guys are, make sure you guys are prioritizing this, because those conversations that you hear could change your life. Okay, that's my quick plug on the FX Summit. Any questions, just let me know. It says GU check GU is pulling back. Okay. Good call. GU is pulling back. $1.349, 349, 3495. All right, I'm going to set a sell limit on GBP USD, ladies and gents, a sell limit. So this is going to be trade number 1. The risk is really high on this trade. I'm going to be honest, there's about 60 pips of risk. It's a little bit over 3-to-1 risk and reward. So like the R&R is making sense. I want to get like a better entry up here, but I'm not even sure if it's going to retrace all the way there. So I think what I'll do is I'll put a sell limit at 3495. Stop loss is going to be 3556, and I'm just going to reduce my risk size. So guys, risk management is key for these trades. It's a 60 pip stop loss. 6. Take profit 1 is going to be the previous lows, which is 1.341. And TP2 is 1.33. So this is about 60 pips. Okay. Risk management is key. Risk management is key.
Hey Roy,
What's up?
I have a question based off of indices. So
Yeah,
like
talk to me.
I remember yesterday you were getting at when it comes to indices, you just want to be like in and out with the bag. And my question is like why? Because say you're trading within like the 4-hour time frame.
Right.
So like wouldn't you would wait for the next candle to close or open, which would be another 4 hours. So it's like kind of like a swing in my eyes. Like if you're trying to wait for say 3 candles to go by. So for a big move, like my
Yeah.
question is why wouldn't you like want to hold an indices pair?
So
Because
when I was
I
saying
trade
that,
US.
yeah, when I was saying that we're only going to be in and out of the indices, I was specifically talking about to this end of the year volatility. So end of the year during November and December, there's higher volatility than usual. So we don't want to be swing trading these positions, expecting the markets to continuously make new highs for us. Instead, we want to be looking at an intraday strategy where we can just catch our pips and get out. That doesn't mean that, if you catch a really good entry on Nasdaq, let's say the market like completely crashes today and sitting down here. Yeah, you don't want to close those trades. You want to hold those because as it continues up here, even if it ranges, you'll still be in profit.
Exactly.
So if you get these lower entries for sure, but now the higher that the market gets to these all-time highs, and we're at this end of the year volatility, if you get your money, you're in profits, you want to close those trades.
Okay.
If you want to leave a runner, that's the perfect healthy medium where you can where you can walk away with money, but you don't have that FOMO of like, oh, I shouldn't have closed that entry.
Yeah, that was the mindset I was also having, like the second thought in addition of just having the runner be that thing that can like really last long. But like you said, end of the year, high volatility, reaching new highs. So I'll write that down. Thank you.
For sure. Like, so here's an example of some trades. My guy T, I know T, you're watching this right now. My guy T was catching entries throughout the whole trend this week. And so he has entries from, I think it was this retest, and he's holding an entry from here. And I think he had taken another entry here and that one hit break even. So he's still holding these entries throughout the week, but he's taken partial profits along the way. So a lot of these decisions I tend to make financially, not just technically. I know that there's traders that encourage everyone to only make decisions technically. I think that you have to be smart. Like if I'm running on this trade and I'm up, let's say $3,000 or $300, depending on your account size. You have to ask yourself, okay, what percentage of my account is that? If it's a significant portion of your account, let's say you have like a $300 account and you just doubled the account, you really got to think smart about the money, not just the technicals. You say, I just doubled my account. If I pull the money now, it will have doubled. Or I can take the chance of it continuing forever, or take the chance of it reversing and I have no money. Now, if you've already built a cushion in your account, you're already up 3, 4, 5%, whatever it is, you don't really need to bag that win in order to hit your goals for the week or the day. Then just hold these trades. But if you haven't hit your weekly goal or something, you want to just catch those wins, because that's the priority. It's not being in the trade forever. It's really making sure you hit your weekly targets so you can hit your monthly goal.
Okay, because that's the type of trading formation like I was trying to get in, which like you were referencing the guy that has positions loaded up. So I was thinking about doing that for like the week, and then by the end of the week, closing off.
Close all the runners. Yep.
Yeah.
Yeah, that's a perfect strategy. Now the thing is that the higher a trend gets, you can't keep trading the same way all the way through. So we've already had a low, higher low, high, higher high, higher low, higher high, higher low, higher high. We need a higher low, but the higher the trend gets, the more likely we are to see like a sharp pullback before we continue the trend. And so the higher we get, the less likely I am to hold those trades, especially this one, like the break and retest of an all-time high. My first take profit level is going to be the actual all-time high right here. And then I can use my Fibonacci levels to find the entry or to find the exit. But I really want to take like 50 or 70% of my position off the table right here, bag my 600 pips, and then be able to hold that runner for maybe like, double that, maybe 1,000 pips or 1,200 pips.
Okay.
Makes sense?
Yeah. Yes. Thank you.
For sure. And this is another reason why I don't really trade breakouts either, because breakouts have like, they have limited upside, especially if you're dealing with all-time high territories, because it's hard to figure out how far it's going to go. But when the market retraces back to like a key level, you get a much better risk and reward for that trade. You get a better entry and you get way more pips out of it. So those are like ideal for me. Like I ideally like the market to retrace deeper, but when the market's in momentum, it usually continues. And that's why I'm not trying to, keep waiting for that push. Sorry, let me correct what I just said. Because the market's in momentum, I'm looking to catch the retest for that short-term push. Sorry, I had to correct myself. This pullback could have been the one to take us all the way down. I'm really hoping that we get back up to this to our sell limit, just so we can reduce that risk. But I do have a sell limit sitting at 3495. See if we curl back up at the market open and then get that drop. If the market keeps crashing, that's fine. Just means that we're going to have to get to the markets earlier on these live streams. So instead of 8 o'clock, maybe 7:30 or 7 a.m. Cool, 30 pips away from entry. Someone said to look at GJ. GJ. So when the market broke out of this consolidation, huge bullish push, it came back down to retest the 61. I remember last week I called a buy at the 61, closed the trade in about 10 pips negative. This was one of the trades on, if you guys are looking at our new YouTube series, the trades of the week, you guys will see the first trades of the week is a trade that I went through last week where I tried to enter GJ early. We tried to enter right here off of the break and retest. And then we exited the trade. Price would have came down, hit our stop loss, and then it broke and retested, came up and hit that take profit, and now it broke out. Because the market on this time frame has been making lower highs and lower lows, this could be a lower high right here. So I'm expecting two things, either a double top and drop, or maybe just a little bit deeper of a retracement before we continue this. All right. On the higher timeframes, on the weekly, I'm bullish on GJ, but I do think that we're due for a retracement. I think that we're due for one more retracement to the downside and then a continuation of that trend. That's my take on GJ. Is short term, I think that we're going to head bearish. Short term, I think we're going to head back to 152.7. And then longer term, I think that we're going to rebound all the way back up to 158. All right. I'm not looking to trade GJ during the session. I don't see enough confirmations for my liking. We have a 61 retest. That's pretty good. But personally, I like GU a lot more. I feel like GU, even though we might not get an entry, GU just a lot more clean for me. So those are the GBPs. The reason I'm asking you guys to give me questions is, like I said, before the market open, we're basically just waiting for Nasdaq to just show its hand. Which way is it going to fake first? Is it going to fake down first so we can catch a buy entry from down here? Or is it going to fake up, retrace back down so we can catch a buy entry from up here? That's basically what I'm looking to see. So any questions, you guys load them up, put them in the chats. Let's see what we can see. Any thoughts on GU? I see a nice buy right now. I do not see a buy on GU right now. I see what you're looking at. You know, this shorter time frame trend is making higher highs, higher lows.
Down first, do you have a buy limit already set?
For GU? Or for Nasdaq? Yo. GU or Nasdaq? Which pair? For this, I do not have a buy limit, no. I'm expecting bears. Lower highs, lower low. Retracement, I think we can get one more push to the downside. The first take profit is this daily swing low. At that daily swing low, if you are looking for buys, that's where I would look to take the market the other way. But 341 is our TP1. That's where I'll be taking the majority of my position and moving it to break even. All right. US 30 on the higher time frame is testing this sell level. But it's also still respecting this support, this daily support. So a break above these previous candlesticks would indicate US 30 bullish. A break below this structural support will indicate US 30 pushing down to these lower levels. So US 30, it is sitting at that daily support. Like it would be really awesome to see like a bullish push up. That way we can catch a retest for the continuation. But if we look left, we are still testing these previous sell zones on the left. So if I could adjust this to the bodies, it would look a little bit closer to something like this. All right, so support, resistance, support, potential resistance. That's where the market could drop from, as a retest of this previous level. All right, now a break above and a closure above these candlesticks, that would indicate the bulls moving back in. So that's what we're looking at. We'll do some lower time frame. Lower time frame looks like the market wants to come back down. See this nice almost triple top rejection. But I also look at these things. So here's the previous high. We've broken above that previous high and formed a double bottom, which usually indicates support being formed. So as long as price respects this double bottom area here, we can continue to the upside. Now I might fake a little bit below just to clear the lows. You know, a lot of people, if they are entering a buy limit here, they're going to put their stop loss, let's say somewhere conservative, right below this wick. So the market might consolidate, wick down, hit that stop, and then keep going. And so if we do enter this trade, we'll have to put our stop loss probably below this structural level right here to give us enough room. So lower time frame, we're still respecting the double bottom. As long as we continue to respect the double bottom, that indicates a bullish push. And we just need that bullish push up, spike back down during the market open, and then we are good to go. So I think gold will also sell off. Yeah, we already went through gold, already did all those. Do you use Fibonacci on all your setups? Yeah, most of them. You guys are asking me to look at all these pairs. I'm really only looking at a handful of pairs. All right, I'm really only looking at a handful of pairs. I can give you guys some direction in terms of what the dollar is looking like. You guys can make a decision on UJ and everything else. The dollar is still making lower highs and lower lows. So for now, the dollar looks like it's pushing bullish again. So it makes sense that we're selling GU. Okay. Dollar goes up, GU goes down. AU goes down. UJ goes up. UCAD goes up. So if the dollar continues bullish, that's what you'll have. You'll have UCAD and UJ bullish. You have AU, EU, and GU bearish. And that's what we're expecting now. It looks like the market wants to continue bullish for now. All right, guys, I'm going to go get a quick drink. I'll see you guys in 2 minutes, literally just 2 minutes. Load up any questions that you guys have in the chat. Let me come back. We can go through any of those questions. Bada boom. That's basically it. We got about 25 minutes until the market opens. So until then, we're just keeping our eye open, staying focused, and seeing what we can find. All right, I'm back. Oof. He said my sound is working. You guys can hear me, right?
Yes.
Okay,
we can
there we
hear
go. All right, guys, pre-market open, got about 18 minutes left. Looking for that spike up and spike back down. Told you guys that that first trade would have looked something like this. As soon as it pushed up in profit, we would have put our stop loss and break even. The market's going to continue pushing up, and at the market open, we're going to get a push back down, most likely. And then on that push back down, we'll be looking to enter a trade. Another way to look at this is in terms of consolidation. So either break and retest of that consolidation, which I don't really like, or a break back in to retest one more time and a push to the upside. That would be ideal for me. Nick, are you still in this Nasdaq trade? He says nope. Did you close it or did it hit break even? Break even? Okay.
Based on that 30 minutes, do you think that Nas right now is at like a double bottom formation?
Yeah, for sure. That's what I was saying earlier is the thing that's making me think bullish is the moment, like the trend of the market is bullish. And then we broke above this resistance and started to form a double bottom. Now, the thing is like, there's also a triple top forming up here. So I really wanted to see like one more pullback and then tap back up. I'm perfectly aware that we might not get a pullback at the triple bottom. So I'm either looking for this or this. Does that make sense?
Yes, thank you.
For sure. I see the continuation formation right here. The thing is markets don't move in a straight line. So if it wants to make it up here, there's going to be a pullback. I just want to see a big spike during the market open and then a retracement back down. I want to see it hold here, wick, and then we can get in for a market entry. Guys, please don't put the same pair 15 times in the YouTube chat. I will not respond. How do you feel about FTMO and funded accounts? I like FTMO as a company. They're reputable. They've paid out. They do give you some trouble sometimes, but when it comes time to pay out, the money hits the account. And that's really like my number one priority. The other thing about funding companies is that if you guys are not comfortable with your strategy, don't just go for funding because you don't want to use your own money. You really want to look at funding as like, okay, I'm so confident in my strategy. I keep doing well with these small accounts and pulling out money. Now I want to play at a bigger level. And so the funded account is a chance for you to kind of play at that big level and be able to trade those larger sized accounts. Now, most people fail the challenges. This is how they make money. Okay. Most people fail the funding challenges. This is how FTMO and Funding Talent and all these companies have a business model. Their business model is if most people lose, we get to make all that money on the challenges. And then if anybody wins, we get to pay those people out. So once you understand that game, you're like, well, I definitely don't want to be one of these people that's feeding them my money to pay out to other people. I'd much rather be trading right and getting paid out. And so you have to develop a strategy, develop the skills, the confidence, develop the, it's really, to me, it's just about, you have to develop the experience and the confidence, and then you have to develop the organizational skills. Most people fail the challenges not because they can't trade, but honestly because they just can't play by the rules that FTMO has set. A lot of you guys are trading instinctively, and it works because you've been doing it for so long. Your instinct is actually right. When it comes time for you to say, I'm not going to risk more than 10% on this account, and I have to like win a certain amount of trades, that's where a lot of you guys start to mess up. So when it comes to funding challenges, just understand that you have to build a different skill set than the one that you're using to make money on your small account. To make money on your small account, somebody could have, for example, taken this trade like Nick did, and then taken, 40, 50, 60 pips out of the market and jumped out of the market. Now that's a way that you can make money on the small account. You do those throughout the day. You can make 150, 180 that day. You do that twice a week. You can pull out $300-400. It's possible in that $1,000 account, $2,000 account to have those kinds of moves. But when you go to like, okay, I have a 50K account and I have to make 10%, you have to think about it in terms of percentages, really. So this trade, for example, guys, is 3-to-1 risk and reward, which means that if if the market comes down for a retest and we get entered, if you're risking 1% of your account, you're looking to make back 3.27%. That's the return on this trade. And so you start looking at trading as risk and reward and percentages a lot more than you're looking at it in terms of just making money. That's the shift that has to happen if you want to manage like a large account. Okay, even if it's not a prop firm, even if it's your own money, if you want to handle large amounts, you have to start thinking about trading in terms of risk and reward. So let's say that you risk 1K, that's 1% of your account. Let's imagine you have a $100,000 funded account. You'll be looking to make back 3.27. Okay. All right, if you're risking 100, you'd be looking to make back 327. If you're risking $10, you'll be looking to make back $32.7. Does that make sense, guys? So when you shift your focus to that, trading the larger accounts doesn't really get in your head because the numbers don't really matter. It's all percentages. But you first have to build your perspective on trading to be thinking in terms of percentages and be thinking in terms of risk and reward. Okay. Now you'll be like, oh, but I know this guy that beat the challenge in 2 trades and he didn't use risk. He didn't use proper risk. Guys, if you take 3 trades, 20 lots, 10 lots, whatever it is, and those trades run and it's an amazing day, don't think that individual is going to have the same luck every week. Okay. The thing about these funded accounts is you have to be disciplined, which means that you might not even trade every week. You might have an amazing week. I had one of my best weeks ever back in October. The past 2 weeks I've been losing, but I haven't lost enough to even dig into the wins that I had in October. And so I recognize that like it's a different skill set to be able to know when not to trade, to be able to protect the capital and just avoid certain trades because you know that the risk just doesn't make sense. And when you start to think that way, you don't really, those are the people that end up keeping the accounts. The ones that start off first 2 days, they beat the challenge, 20 lots, 1 trade, it runs their way, everything is happy. You still have to do the verification. You still have to do the 5% cushion. You still have to do the withdrawal. And those are different skill sets. You really have to be disciplined for that. So that's my rundown on funding companies. Okay, it's make sure that you're not using it as a way to avoid using your own capital. Make sure that if you guys are going to go for these funding challenges, you do it properly. So ChartAddicts members, you know that you're working with a coach. You know that your coach is designing a program for you to go to do your live account, get a certain number, use that amount to potentially pay for the challenge. Do the demo challenge once or twice to get used to the larger numbers. Transition over and make sure you work with your coach to make sure that your performance is up to par so you can keep the account. So if you guys are in ChartAddicts, it's pretty straightforward about funding companies. But yeah, just talk to your coach and see if it's right for you. Oh, that sounded like a medicine commercial. So talk to your doctor and see if coaching is right for you. Do you trade JUR 30? No, I do not. I have a few friends that trade JUR 30, including James. How do you feel? He said NAS 100 about to be lit. Yes, sir. Can we place now a buy limit? I'm not looking to enter a limit, honestly, because of high impact news. I've been taking off my limit trading and I've just been doing market entries. Thank you so much. I want FTMO demo. I was just seeing if it was worth it. I seem to be getting tempted to up my lot to beat the challenge. That's what they try to get you to do. They want you to beat, or they want you to lose a challenge, honestly. If anyone was wondering how to protect profit that has been collected, be selective on the trades you get in and limit yourself to 4 to 8 trades a week. It's something that's helped me during times like this. There we go. Limiting your trading is key, guys. This is a game of less is more. It's a game of less is more. This trade yesterday slapped, by the way. I'm just going to be completely honest with you guys. I entered here. I was in profit. I was in drawdown. Okay, thank God I was on a call because I wasn't even checking my phone. When I came back to check, the market had recovered above support, and I was like, okay, now I'm going to hold it. The market recovered, pushed up, and then I just put it in break even. It came up and hit take profit later in the day. That was a gorgeous trade. So price is starting to form a little bit of resistance here. And so let's just see how it reacts around this range. We have about 7 more minutes until the market open. Yeah, Kiana's right. If you like being disciplined with your trades and not taking too many trades, it allows you to take a second to think, okay, is this the best trade for me? So we look at the market and say, where's the best trades? The best trades are either, we kind of talked about this. We're either going to do some kind of fake out down here and then recover above support and then move bullish. We can push through, retest, and then continue bullish. Or we can violate and continue bearish. So there's really only 3 options. And then we look at the trades and say, I'm not going to take all 3. I'm not going to take every trade, US 30 and NAS and GJ and gold. Instead, I'm just only looking at one pair, and I'm looking to see how I can maneuver around that pair. All right, so if I lose this first trade, let's say that we try to take a long position down here. Okay, and the market shoots down and we get our stop loss hit. Oh no. If we're still looking at Nasdaq and we have all of our levels set and we're confident about our levels, if the market recovers back up and starts to form support, we can re-enter here. And the move back up is going to make up for the money that we lost in the stop loss. So being vigilant, I'm going to take 2 trades max on Nasdaq. That would put us at 3 trades total for the that would put us at 3 trades total for the stream. GJ is retracing right now. Let's see if we get a retracement back up to our sell limit. And we'll keep an eye on Nasdaq. All right. I'm going to run to the restroom real quick before the market opens. I'll see you guys in a few minutes. All right. BTC looks like it's about to fall out of the sky. I don't need to remind you guys, buy the frickin' dip, buy the dip, buy the dip. Every single time that you guys go on Coinbase and you see the negatives, like Bitcoin's down 5%, you know, all your favorite coins down 10%, 12%, 15%, buy those dips. Do not put all your money in. It's not financial advice, not financial advice. Please consult a financial professional, but buy those dips. Okay. Take advantage of those dips. Don't, you know, I wouldn't put all my money in at this dip. I'd put some here. It dips lower. I'd put some more here. Dips lower. I'd put some more here. Market recovers. All my positions are in profit. Okay. So I would do this in terms of investing for my personal self. This is what I would do. I don't really trade I don't really trade BTC on MetaTrader. But in terms of investments, just keep building your bag, guys. Keep planting those seeds. Those seeds are going to come back to pay you in the long term. And yeah, you're not going to regret it. This is one of the most revolutionary times in history. You're either sitting on the sideline watching it happen, or you're going to get involved and figure out, even if it's small money, even if you don't have much, to see how you can get involved and how you can learn more about that market and how you can be involved in the future. Nasdaq seems to be rejecting the 16.4 level pretty heavy. Another good like higher time frame trade that I'd like is, you guys see this trend line that's forming here? So like if it pushes all the way back down to the lows of last week, like 14,000 or 16,300, the lows of earlier this week, then that could be a really good entry too. We have first touch on the trend line, second touch, the third touch could be right here. That could be a really good move to the upside. Most likely though, I think that we're going to get a push up or a push and then consolidation. Maybe we retest these lows and continue. So I have this trend line drawn out. I'm going to use it as one of my guides because, you know, the markets do tend to respect trend lines. At least the index markets do. So as long as it's respecting this trend line, I want to keep going with that idea. So either this entry right here or this entry somewhere over here. Those are my backup options. Okay, always looking at backup options. My first option is we're looking for a spike down at the market open, which is happening right now, to see if we can catch a long position back up. It's looking a little bit aggressive. So I'm not looking to enter buys just yet. Because you guys have to see, okay, why is Roy trying to buy the highs, even though it's buy low and sell high? I'm still looking at these previous highs right here. And as long as price holds support above those highs, we can likely continue. If price continues to break through, then it's likely going to retest and continue bearish. So now it's the market open. I'm down on the 30-minute time frame. I'm going to fib my move. So really smart thing about not setting buy limits is that, okay, that just happened. Setting a buy limit would have completely crushed us because that would have hit our stop loss that was sitting right below here. Instead, we can actually just look at the market and say, okay, if we had tried to buy here, we would have got crushed. Sells, you know, if you had taken a sell, you would have been correct for now. And then if the market rebounds back up and gives us a retest, that's where we can look for longs. The market open is always some sort of spike in one direction, but the trend of the day, that could be very, very different.
I'm
So I
currently,
know it looks,
hi Roy, yeah, I'm currently selling gold and buying US30. I didn't trade NAS today.
yeah, gold shorts at 65. Very easy,
Yeah,
right? Still at that high.
still holding
U30?
US30. Yeah, I'm holding US30. I buy it really low, so it's fine. I will wait for a few minutes more.
I like 35, 830. Okay, I like 35, 830. Push down halfway in the range. So like
Mhm.
this. And then come back up. You just have to look at the price action. You see rejection here, support here.
Yeah, I have a big support at 35,900. So that's what is holding the price right now.
All right. My biggest zone in this market right now is 36,000.
Okay.
Any
there's
break
still-
above 36, any above 36,000, you're back bullish. Okay.
All right.
But if it keeps rejecting that 36,000 as resistance, it's going to continue to drop.
Yeah, I'm currently seeing just the price and see what happened then. I'm gonna wait like 10 minutes, 20. Let's see.
Okay. So all the news for today is still bullish for indices. And so whatever's happening here, I genuinely believe it's like retracing either back down to these deeper retracement levels, or it's going to break back above these highs, because the unemployment claims really aren't that bad. The biggest issue isn't even unemployment in this country. There's only like 4 million unemployed people in America, but there's 10 million open jobs. So we have a labor shortage. The unemployment rate is honestly like, to me, I don't think it's that big of an indicator for the stock markets. The manufacturing index, this should be really, really good for the stock markets. The FOMC member Williams speaking, I'm not really sure what they're saying. I'll have to pull it up as soon as we're done with this stream and kind of see what they're talking about. But at the end of the day, I'm still looking to go long on Nasdaq. And so as soon as it retraces back to my trend line, as soon as it retraces back to my key levels here, and then maybe either these lows from yesterday, or it can make a higher low anywhere in the zone. So I would look at the 16,315 to 16,330 area for longs. Okay, which let's go ahead and look at this. Previous highs. Previous high, previous high, previous high. Previous low. Fibonacci. 61, 71, 78% right there. Maybe like a push up and then a retest and continuation. All right. And I've even seen Nasdaq do this, and this, which means that we can get two potential retests off of that trend line if the market continues to drop. So as long as you have those levels drawn up, you'll be able to find that low price. The way that the market is dropping doesn't make me think that it's going to rebound back above support anytime soon, which is why I'm already looking at these lower levels. Okay, I don't think that this thing is going to just spike back up, retest, and go back like this. I think at this point, bears had a pretty aggressive market open. I'm going to look for some of these deeper levels down here. You know, this U30 looking crazy, bro. This thing's looking bearish. I'm just going to throw that out there.
Yeah. I'm closing half of my position.
GJ. Nice retest here. For the downside, GU has not hit our entry. And so, ladies and gentlemen, we're right back to it. We're right back to Nasdaq, right where we started. You know, since we're since we're scalping, I think we could We could scalp a short position. But no, I'm going to wait for the longs. I'm going to wait for the longs. Higher time frames, the trend is still bullish. The highest probability trade is to wait for a dip and to try to get the market at the dip. All right, final reminders. I know a lot of folks have to hop off and get to work and whatnot. FX Summit, the tickets are now live. If you're a ChartAddicts member, please reach out to admin for your discount code so that you can get discounted tickets for the event. If you guys are watching on YouTube, the Forex Summit is going to be, or the FX Summit 2022 is going to be one of the most exciting social Forex events ever. It's a chance to build community. It's a chance to get to know everybody in the industry and to meet some of your favorite social figures in the space. Mr. Q Banks himself, Lambo Raul, Emil Trader, one of the largest names in the Hispanic community for crypto and for trading in general. Mr. Druzy Banks, My Life Real Quick, Ryan Gilpin. We got Jason Stewart, Mr. QB Stu himself, Andy Peters, the man, the myth, the legend, Mr. Pip Connect, Alex Gonzalez, Mr. Set It and Forget It, FX Alex G, and James Storms, Mr. 1.7 million in a month. This is going to be a great lineup. We also have some other folks that have expressed interest. Like I said, we have Mamba FX, Wix Don't Lie, and some other big names. Keep an eye out for the website for all those updates on who else is coming. And we have a very special announcement coming soon in terms of who the guest speakers are, who's going to be speaking on these panels. So that was my take in case anybody had to hop off. Just in case you guys are hopping off, it's FX Summit 2022. Summit 2022. A historic moment in the Forex community. Oh, guys, we might actually recover. We might actually recover. I might be looking to go long here, guys. All right, I'm back down on the smaller time frames. I want to see us break above the support, guys. If we break above the support, I'm going to put a small entry on the break in, and I'm going to put like a large position on the retest. Okay, so I'm putting a small position right now on the break inside the range. A small buy position for Nasdaq on the break inside the range. So less than half of my normal position size. And then I'm going to put the rest of it on the retest back down. Okay, so if we actually do break bullish and we get a retracement back down, that is where I'll put the largest position because we will have already confirmed that the market is bullish.
Wait, so you said you to go bullish now or wait for a little bit?
Yeah, I put a small position right here on this candlestick as my first position, and I'm going to put the remainder of my position on the retest. So if you normally enter a standard, I would put like a 0.2 right here on the break in, and then I would put a 0.8 on the way back when it retests. Make sense?
Got it, thank you.
It's about 28 points of risk. Pretty high risk. You could probably get away with even a smaller stop loss somewhere like above this zone. So stop loss, you can do 370, 16,370. What do you guys, what do you know? It actually broke back above. That's crazy. And so the reason that we put a small position in first is because the markets haven't closed yet. And so until it closes above, this thing could still reject and move to the downside. And so this is kind of like a tester trade. The tester trade is just to have something in the market just in case it just starts flying, but it's not large enough because the confirmation hasn't really been set yet. The confirmation will be set by a bullish break inside the range and then a retest of that zone. All right. So as it breaks back in, we'll basically hold this trade. I'm going to put my stop loss 16,370. And the rest is we just got to be patient. Move these arrows. We're having a little bit of trouble breaking above that support, but it's still pretty early in the market open. So we'll allow the market a chance to kind of dance around for a little bit to see if bulls are going to take back control or if bears want to take the session. So far, so good. The closures are looking good. Now is the patience game, peeps. Now is the patience game. We chill out, wait for the market to go bullish. As soon as we see a retest, we're good to go. All right, give me a head count in the chat of if anybody's in this trade. She's struggling. Come on, baby. Come on. Oh, we got everybody in. Oh, geez. Alex A said waiting for a retest. Ooh, my guy wants that high probability. All right, we're going to hang out here for a little bit while the market tries to figure out a direction. It looks like it's trying to push bullish, but it just can't seem to break above. So we just got to see if the bulls just kind of come in and give it that push that they need just to break through this zone. Okay, so far solid break back inside the range. Just really need a solid closure. Just need a solid closure like this. Oh, just like that. That's perfect. That'll do. Oh. Ladies and gents. That's that entry. We got a great entry. What I'm looking to do right now is to see if we get one more pullback to get that rest of the position. If we don't, I think this thing is just honestly just going to break through. If you're on YouTube, and you took the NAS 100, put it in the YouTube comments, please. All right, what are we looking like right now? About 320 pips up. I got a small position running. I do want to retest. I think the retest, guys, are you ready for this? Are you listening to me? We're going to get a push up. It's going to come down. And it's not going to retest exactly the height of this. It's going to go a little bit lower. Don't get faked out, because that's what's going to take us to TP. There's going to be a retest that comes down, spikes right at the highs of these zones. That will be your re-entry. Spike back down to that 16,410, 16,410 or 16,404, right? Maybe even as low as 16,400, but 16,404, 405, that's where you can get a really good entry for a retest. If it doesn't retest, it means that we don't have a re-entry. Exactly. No retest, no entry. No retest, no entry. We do not buy a market that's pushing. Okay, that's how you get caught in a retest. All of a sudden you enter right now, it pushes up a little bit and then just spikes you down into a retest. You don't want none of that. You don't want any part of that problem. You want to wait for it to spike down first and then catch the retest. And you guys can move your stop loss to break even if you'd like. Oh, that might have been the retest. All right. If this holds, then I think this is going to be a retest candle. I'm already in from this bottom position, so I don't know if I'm looking to re-enter unless it like fakes under first and then closes above. That would be a good re-entry opportunity for me. What was I going to say? Yeah, you guys are free to put your stop loss to break even. If you guys entered that small position on the break back inside anywhere in this candle, you guys can feel free to put your stop loss and break even. If it retests, I don't think it's going to come back to these lows. Okay. That's my personal, that's just kind of my take on it. This really could be a retest for another entry, but I wouldn't put a full position there. If anybody does take this like re-entry right now, I would only put small positions. If you guys see like it tries to break through and then closes back above and retests, this is where I would put a full position on the retest back out. So you guys will find a theme in my trading strategy. It's I'm looking for a break above a zone, and then I'm looking for a retest above that zone. Oof. All right, I'm going to re-enter. I'm personally going to re-enter, guys. That's my re-entry. It's a, you know, it just came back to that same zone that we were looking at. It spiked up and came back down, gave me exactly what I wanted. So I'm going to try to give this another try. All right, I was kind of expecting this 15-minute candle to come back up and fill, but it looks like it's rejecting. It looks like it wants to come back down. Huge shift. So it's the same stop loss for that reentry, the same stop loss as before, 370. If you guys want to wait for this candlestick to close first, see how the bears are acting here, see if the bulls step back in, that I think would be a lot higher probability. Like if we get another break back above, sheesh. All right, yeah, I'm out. One of my trades hit SL. Was that the spread? Did anyone's SL hit on your brokers? Does anyone have Hugo's way? He said, I'm willing to pay $450 per day. And in this 15-minute, I already made it. Get a membership, my guy. He said $450. Said, I got stopped on top tier. Like, I still see the trade as being valid. The stop loss placement on Hugo, it kicked me out. FTMO is still in. Adjusting. I'm re-entering on Hugo. I'm still in on FTMO. There's aggressive bearish momentum. I understand it's a risky trade, but momentum for the week, aggressively bullish. We had a close break above these previous highs. And even though this candlestick is kind of grabbing liquidity, I still feel like we can push through and create all-time highs. So I'm still bullish on this. If it starts to break below the previous candle, like under these candlesticks right here, and starts to break below and retest, then I think that bears are going to win the day. But for now, you know, the momentum for the week says bullish. The trend of the week is still bullish. So the trade's still valid as far as I can see. It says check out U30. Yep. This one was a lot more straightforward. Just because we had already broken below this neckline of the support, we were retesting the previous 36,000 key level. But as soon as we get down to like 35,800, I think that we're going to like spike below, break back above, and recover. What happened with Nas? Okay, we're back in profit. We're back in profit. Whew. Talk about a close call. Now, Kiana, this is when you see why I said we're in and out of the markets. That first spike up, everybody who closed that trade immediately just walked away with that 400 pips. Holding it put you through this kind of situation where we had to re-enter and kind of question whether the market was going to break below and stuff like that. So that's what I meant about in these market conditions, especially with a lot of news and late in the year. You kind of want to be more in and out with your trading and just kind of bag your wins when you get a few candlesticks in your direction.
Yeah, I see that. Thank you.
No problem. All right, so folks, I actually do have to hop off. I got a lot of work to do today. Here's what I'm going to leave you with Nasdaq. If you are not comfortable with holding volatility on these trades, you're pretty close to break even now. And so you could choose to close this trade if you wish, or you can hold it and just see if the market pushes in your direction. The rest of you guys, if you're confident in the trade that you took, you accepted the risk like you were supposed to, then hold this trade. Just keep looking for a closure above this 390 level, 385, 390. Closures up here are really good. And then as soon as it closes back above 410, then we're in the gold. Okay. Take partial profits at previous highs, right? Don't be a hero. This high, that high, and then 445, 16,445. The trade idea is still valid. Higher time frame. Let's see if we get a follow through and if we get a push to the upside. Like I said, if you're not comfortable holding volatility, I would close this trade. And I would basically just either close in minor profits or just, hold it and break even or whatever you guys want to do. That's what I got for today. Anybody got questions before we hop off? He said, is the membership a monthly subscription? Yes, it's monthly. Full coaching is $99 a month. If you guys just want signals, it's $59 a month.
Quick question, Roy. For passing like the FTMO or the FMS Traders Challenge, would you suggest to like actually go out and just pull money out of the market for those for the challenges, or try to hold?
It depends on your strategy. If you're catching, let's say that you have a $10,000 account, you have to make $1,000, right? You basically like, if you're good at catching $200 trades and you can just keep closing 200, 200, 200, 5 trades later, you've beat the challenge, correct?
Right.
Now, if the largest trades that you're winning are like $60, $50, you're going to have to win a lot of trades to beat that challenge. So you might want to be holding those positions. And so the thing is that you have to look at your strategy and say, would I make more money if I hold my trades or if I close them early? And so take the last 20 or 25 trades that you have and say, if I held all of them to full TP, how much would I have made? And then because I closed them, how much did I make? That's going to be your answer. Make sense?
Yes, absolutely. Thank you.
No problem. He said, are you an institutional trader? I might be. I said, I'm not, but I fit the description.
Roy's the inside man. Don't play with him.
Come on now. Okay, I'll start talking my shit when this trade busts. All right. I know this thing reversed on SL. I'm over here talking my shit. Oh man. All right. Great to see all of you guys this morning. It's another Thursday live stream. You know it's successful. It's successful when we learn something. It's successful when we take something away. It's successful when we at least take something that we can apply to our own trading. Even though you guys might not have taken this trade, at least that you guys saw some potential pitfalls of trading indices, these spikes at the market open that create a high and a low, and how kind of like the markets flip up between the candlesticks. This is your opportunity to basically, learn a few things from this market. So either way, it was a successful day. Great seeing everybody. Happy and safe trading. So does it matter how the hourly closes? Yeah, of course. If the hourly closes bearish, it's not looking good. I'll be honest. So that's what I said. If you guys are not comfortable holding the volatility, to just skip out on this trade. This is not one of those trades that's like, very straightforward. We're at daily support. It's going to boom. We're at all-time highs, and we're basically trying for new all-time highs. So it is a risk. So just understand the trade that you're taking. And if you're comfortable with that trade, then hold it. If you're not, you guys can close and break even and enjoy the rest of your day. All right. All right, take it easy, everybody. Take it easy, YouTube. Take it easy. Everybody on the Zoom call, happy and safe trading. Enjoy the rest of your days. Go. Just do me a favor, guys. Text a family member. Text anybody that you guys like a friend, somebody that you fuck with, and just tell them something nice. Be like, hey, man, just wanted to let you know I appreciate you. You did that thing last week. That was awesome. I appreciate you. Tell your kids. Be like, hey, I know I didn't really, or this and that. Be like, hey, I know that you have this thing coming up. I'm really proud of you. I'm proud of you for going out there. Tell somebody something nice. It's going to make you feel better. Have an amazing day, everybody. And make sure to get your tickets to the FX Summit. Peace. Serge said, my text to my mom, you have big, beautiful ears.